My name is Eric McCardle, Managing Director of Advisor Solutions here at Simplify. In today's video, we are going to unpack the Fund Insights blog post titled, "Can Bond Investors Outperform the Aggregate Bond Index?" authored by my colleague, Larry Kim. How do active managers perform versus their benchmark indices? After countless articles written on the subject, most investors are probably aware that, as a group, actively managed equity funds have struggled to outperform their benchmarks. Most investors may not be aware, however, that the same cannot be said for actively managed fixed income funds. In fact, the data shows that the majority of actively managed fixed income funds have outperformed their benchmarks. What accounts for the differences between actively managed equity funds and actively managed bond funds? On the equity side, indexes can be hard to beat because the weighting of each stock in an index is determined by the collective wisdom of the market. The most heavily weighted stocks are the ones which investors have voted on, with their dollars as being the most desirable. On the fixed income side, indexes are constructed differently. The weight of the index components is not driven by the collective wisdom of the market. It's determined primarily by bond issuance. We can see how this works by looking at the allocation to U.S. Treasuries in the Bloomberg Aggregate Bond Index. Since 2011, the percentage of U.S. Treasuries in the index has grown from 35% to over 44%. Is this because investors have decided that Treasuries are more attractive today than they were in 2011? No, it's because the amount of Treasuries issued by the U.S. government has dramatically increased in order to fund growing budget deficits. In other words, the more indebted an entity becomes, the higher its weighting in the index. It is this issuance-based dynamic that opens up opportunities for active managers, who are free to select securities with attractive investment fundamentals. The Simplify Aggregate Bond ETF, ticker symbol AGGH, is an actively managed fixed income ETF that attempts to do just that. Select securities with attractive investment fundamentals in order to maximize total return. Step 1 in AGGH's investment process is to buy bonds with the highest risk-adjusted yields. One example of this are 30-year TIPS, which are trading at historically high real yields versus nominal treasuries. Once the primary securities and sectors are chosen, step 2 is to set the fund's duration to approximate that of the index. It does this by first targeting the part of the Treasury yield curve with the highest yields and then, using Treasury futures contracts, sizes the position so that, when combined with the bonds chosen in step 1, result in a duration that closely matches the index. In this example, we can see that there is a hump in the Treasury yield curve around the 20-year mark. Thus, the fund might use 20-year Treasury futures to round out the fund's duration. Lastly, in step 3, the fund will enhance yield with a risk-managed option selling strategy. By selling options, the fund can accomplish 2 goals. The first is to enhance income. The second is to use options to enter or exit positions at favorable prices. For example, suppose AGGH had a target price to acquire shares in an investment-grade corporate bond ETF that was below its current price. AGGH could sell put options with a strike price at the target price and then collect immediate option income. Then, if the ETF declined in price to the fund's target, it would acquire the shares of the ETF at the desired price, similar to buying using a limit order. The ultimate objective is to enhance both income as well as total returns. AGGH could thus be used by any investor, either as a complement to their current fixed income holdings or as the sole position representing the portfolio's investment-grade corporate bond or investment-grade bond solution. We just posted an article on the Simplify website entitled, "Can Bond Investors Outperform the Aggregate Bond Index?" From the main ETF tab, navigate to the AGGH page where you'll see a link to the article. As always, we're happy to answer questions about the Simplify ETFs in this blog, including portfolio implementation ideas. From the Simplify homepage, just click the Contact Us button to set up an appointment. We look forward to speaking with you.